How do I recast my mortgage? Hi, my name is Kelly Zitlow, and I've been a residential lender for over 25 years. I have found that a lot of people don't know about recasting, and in a competitive real estate market, recasting a mortgage can be a game changer to your overall strategy. So if you haven't heard of this, listen up because it's pretty cool. So what is recasting? Recasting a mortgage is when a borrower brings a large sum of money back to the lender and asks them to apply those funds as a principal reduction to their home loan, and then the lender reamortizes the remaining balance, which then drops the monthly payment. Now, this is important because you can take, let's say, $50,000 and apply it towards your principal and keep your payment where it is. That's not a recast, that's just a principal reduction. But a lot of people want to then take that $50,000 and have their payment reflect the new lower loan balance, and that's where recasting is the key. Why is recasting such a great option? Well, in a very competitive real estate market, which so many areas across the nation are experiencing, we have many people that are relocating from certain parts of the country to other parts. So recasting becomes a strategy that an experienced mortgage lender may be talking with you about. And essentially, here's how it works. Let's say that you currently own your home free and clear, or maybe you have a small loan balance, but you're going to get a good chunk of money when you go to sell that house. But maybe you don't want to sell that house before you buy your new house. But you don't have the money to put down on the new house, or you just have some money, but not that big, large down payment, which is coming from the sale of your house, right? So here's the strategy. Maybe you would do a 5% down or a low down payment on the new loan, and you would then pay mortgage insurance for a short period of time. But once your house sells, so you buy the new house, you move into the new house, you're good to go. Once your house sells, wherever that is across the country, you bring those proceeds back to the lender and you ask the lender to recast, which means that you're going to do a principal reduction. Now your loan balance is going to be lower, and the recasting will drop your payment to be what it needs to be based on that new principal balance after those funds have been applied. And this is a great strategy because, again, we do have so many people moving, especially here to Arizona, and they want to buy before their house sells. That's the key, and that's where recasting becomes a great option. In essence, this type of strategy really becomes a bridge financing type of strategy. It's a bridge financing option, which essentially just allows you to be able to buy the new house without selling your existing home, if that's your intent, with the option of being able to bring those funds back and reset the mortgage. It works really well. So think of it this way. Here's a good kind of running through the numbers. Let's say that you are purchasing a $600,000 home, and you have enough money in the bank to be able to put 10% down. But you are going to net from the sale of your home, let's call it $500,000. But you won't have those funds until you sell the house. And your goal is to buy the new house here in Arizona prior to selling your other home. This is where it works. So your purchase price here in Arizona is $600,000. You're going to do 10% down, let's say. That's what you've got available to put down. Now you're financing in that scenario $540,000. Once your house sells, you're going to have, let's say, that $500,000 in net proceeds, and maybe you just want to take $200 of that $500,000 and apply it towards your mortgage balance. So in that scenario, you're going to now call your lender and tell them, hey, I've got $200,000. I'd like to do a principal reduction and recast my home loan. They're going to take in the $200,000. Now your loan balance drops to $340,000, and recasting that means that your payment will now drop and be based on $340,000 versus the initial $540,000 that you borrowed out of the gate. That's how it works. Now, a lot of lenders don't talk about recasting. They actually would rather have you refinance. But here's the deal. It may not make sense for you to refinance. And frankly, they probably want you to refinance because that's a revenue generating type of home loan. But here's the situation. Let's say interest rates have gone up. It may not make sense for you to refinance. So you always want to explore, if your goal is to do a principal reduction and drop your payment, you don't necessarily have to refinance. A recast may be a great option. Now, if rates are lower or there's something else going on in your scenario that it makes sense to refinance, then great. have the conversation. But it's not always just a, hey, now I've got to refinance because my house sold and I want to apply money towards my balance and drop my payment. Refinancing may or may not be the best option. Now, both refinancing and recasting each will have their own requirements with regard to qualifications. But the key is on a recast, your credit is not being pulled. You're not having to provide your income documentation. Essentially, the lender is just going to make sure that you haven't had any late payments on your mortgage. They may charge a nominal fee, a couple $100 to actually do the recasting function. Your interest rate's not changing, which is a very important key here, especially in a rising interest rate market. It may not make sense for you to refinance, so recasting could be a great option. Now, if you're going to go down the refinance path, maybe it does make sense for you to refinance. Then at that point, you're going to complete a home loan application again. Your credit's going to be pulled, and your scenario will need to meet the home loan guidelines to be able to qualify for the refinance. So those are the differences. Now, how do you recast? Let's say you're into this and now you have essentially two houses and the other house sold, and you're ready to take those monies and put it towards your home loan balance. In that case, it's pretty simple. You're just going to call your current lender and ask them to recast your mortgage, and they will walk you through the recasting policy. That's it. So again, a couple of months. Generally, they will want you to be in that new loan for at least 2 months. That's a general requirement, and they may charge a couple $100 to actually recast the loan, but that is about it. They'll transfer the money, they'll drop the loan balance, re-amortize your payments based on that new loan balance, and you'll be good to go. Now, the key to this strategy is, in order to be able to have the new loan without selling your existing home, you would have to be able to qualify for both houses. And sometimes people can't. They just aren't in the position to be able to meet the lending guidelines and qualify for both. So in that case, a recast may not be an option. You may actually have to sell your house and then buy the new house. But there are plenty of situations where people are in a position to be able to qualify for both house payments or both houses. Sometimes those houses are they don't have mortgages on them that somebody is selling. In that case, then we're going to count property taxes, homeowners insurance, and any HOA fees in the qualifying ratios. But again, you would have to be able to qualify with both houses to be able to achieve this strategy and then later recast. Now, we've talked a lot about this dual situation where maybe you have a house to sell and you want to use those funds at some point and apply it towards your loan balance, but you want to buy the new house before that house sells. We see that quite often, but keep in mind that it doesn't have to be that particular reason. It could be maybe you're getting a settlement, maybe you've got a bonus and you want to take those funds and apply them towards your home loan balance and recast. Maybe you won the lottery. It could be a variety of reasons. So any cash coming into you, if your goal is to take those monies and apply it towards your principal balance, and you want your payment to change, meaning you want your payment to go down in response to the new principal balance after you have done the principal reduction, that's where a recast comes into play. Please take a moment and subscribe to this channel. I have a true passion for home loan education, and I want to make sure that you're informed and you're making informed buying decisions. So please subscribe and become part of our community. If you learned something today, please give this video a like, and if you have any questions, comment below. Until next time.